Hi there, welcome to Nebi Invest. So Appendix 4C for the December quarter has virtually come to the end. The majority of companies have released it. They're supposed to release it before the start of the new month, which is February. Now, a few stragglers will release their quarterly report on Monday morning before open, but we've seen the vast majority of these Appendix 4Cs being released. So there's quite a few companies I want to look at and do videos on, and that's going to take a while and would lead to heaps of videos being done. So what I'm going to do is I'm going to combine quite a few of these companies into the one video starting today. So I'm going to look at 3 companies today and look at their Appendix 4C, and then I'm going to keep doing this. I'll probably do quite a few videos on this. I'm not sure how many, because there are quite a few companies I do want to look, and potentially there will be a few I'm going to have to leave out. So let's get stuck into it and let's look at the first company on the list. So the first company I'm going to look at is mydeal.com.au. So I'm not going to call them that from now on. Let's call them MyDeal. Now, this company is in the online marketplaces for household goods. And their recent IPO, so they IPO'd on the 22nd of October 2020. The ticker code is MYD. Now, this company reminds me of Kogan when they first IPO'd. They're in this sort of the same sort of field. And I bought Kogan just after the IPO, and I've been buying and selling them ever since, so trading them quite actively. And I probably should have just held Kogan for the long term, because the share price has increased quite a bit since then. Doesn't mean MyDeal will do the same, but they do remind me of Kogan. They do have a market cap of 329 million, which was a little bit higher than what Kogan were, and their gross sales compound annual growth rate is 73%. I found that in their presentation they released on the 2nd of November 2020. I think that compound annual growth rate goes back to 2015 or 16. So if you do want further information, I do highly recommend getting some information. If you are thinking of maybe doing some more research on this company, look at that presentation they released on the 2nd of November, just after they IPO'd. So let's have a look at their Appendix 4C. So the first thing I'll always do is go straight to the cash flows from operating activities. Now, I look at receipts from customers, but I don't try to look at that number in isolation. I try to look at the trend, but because this is MyDeal's first Appendix 4C, we don't have a trend yet. So is this company operating cash flow positive or negative? That's the other thing I really like to look at. And they are cash flow negative to the tune of $2.3 million. But if you look at the line just above that, they did mention they did increase inventory by $2.4 million in the quarter. And that's quite important, because that's something you really have to look at for a company like this, because you have to know if they're increasing inventory or decreasing inventory, if they've had sales, that sort of thing. And because they've increased inventory, that's put a little bit of we'll say a little bit of pressure in the cash flows. And if they went the other way and actually had sales and decreased the inventory levels, they actually would have had a cash flow positive quarter. So it just shows you how important inventory levels are and the trend of inventory levels. Now, they began the quarter with $18 million of cash on hand. Now, that's pre-IPO. Now, with the IPO, they raised $35 million. So they ended the quarter with about $48 million. No debt. And that's always a big positive, big tick in my book. So the fact that they've got $48 million of cash, no debt, is a massive tick. So they did provide us some other details in the presentation or report, and they looked at the year-on-year increases in gross sales and active customers, and both of those are growing at over 200% year-on-year. So active customers is simply a customer who has spent something or used the MyDeal website to buy something in the past year. So that's the most important thing. In the past year, that's considered an active customer. For example, with Kogan, I am not considered an active customer, because last time I bought something on Kogan was about 3 or 4 years ago. They also provided these 2 nice looking graphs that looked at gross sales and active customers, looking at the trend, which is what I like to look at. So thank you, MyDeal management, for providing us with this. Now you can see the first, this goes back to Q1 financial year 2019. You can see the first 4 or 5 quarters, there wasn't much growth in the business. But over the last 4 or 5, the business has been growing in gross sales and active customers. So I think this is definitely a company that has really benefited from COVID-19, and the thematic around online buying, online selling has been brought forward probably 5 or 10 years because of the pandemic. So I think this trend will continue over time. Might slow a little bit over the next few years, but it definitely is going to grow, and mydeal.com.au will be, without doubt, a beneficiary of that trend unless management stuff things up. So, of course, the last thing I always look at is the chart, and this is the chart from the IPO. The market did get excited on the day of the IPO, so share price went as high as $2.20. Fair bit of selling in the next few subsequent days after the IPO. Share price got down to $1.20. Now, that $1.20 seems to be a very solid price of support for the share price in mydeal.com.au. So you can see it's hit it about 3 or 4 times, and every time it's hit it, it's bounced off it quite well. And the share price right now is $1.27 because the past week on the market, general market, has been quite negative, and we've seen share price come down from $1.40, just above $1.40, towards $1.20. So I'm actually looking at this quite closely with a potential buy at $1.20. And if it falls below $1.20, say towards $1.10, that would be quite negative. But if it bounces up past $1.20, higher than $1.20, that would be another sign that $1.20 is a very powerful price support for this company. So I'll be following this company's share price quite closely over the next week or so. So the second company I want to look at is De.mem. So they are a water and wastewater treatment business. And that's a fairly bullish space to be in my opinion. I think there's going to be substantial growth in that area over the next 2 decades. So this is a company I am looking at, starting to research a little bit more. So ticker code is De.mem. They have a market cap of 56 million, so it's not that high. And the trailing 12 months revenue is 12.7 million. So what do I mean by trailing 12 months? Well, they have an reporting season that is 6 months displaced for most other companies. So in August, where most other Australian companies release their full year results, De.mem released their half year results, and in February of, which is next month, in a few days' time, De.mem will release their full year results. So the trailing 12 months looks at June 2019 to June 2020. So revenue of 12.7 million, and they are or were operating cash flow negative to the tune of 1.7, which is not that bad. So if you do want further information on this company, they did release a presentation on the 12th of May. Now I am waiting for a new updated sort of presentation. That's a long time between significant presentations, but you can look at their quarterly report. They did give some information in that. You can look at some other information, go to the website, that sort of thing, to get more information if you're keen on researching this company further. So, of course, the Appendix 4C, the first thing I always look for is receipts from customers and the trend. So we'll see the trend in the next slide, but $5.6 million in receipts for the quarter, which is actually quite higher than the previous quarter. And I do know that because I did know the receipts from that quarter. And the most important thing here is the last line. Are they operating cash flow positive or negative? And for this quarter, they are operating cash flow positive. So there is potential this company has reached an inflection point, particularly if they can continue to be operating cash flow positive in future quarters. Now, when you look at the beginning cash and end cash for De.mem, they began their quarter with $5.4 million of cash and finished the quarter with $5 million of cash on hand. So how did they go backwards with cash when they were operating cash flow positive? Well, because there's also investing in financial cash flows of a business. So investing cash flows could be capital expenditure, acquisition of businesses, and financial cash flows could be paying back borrowings or actually, getting borrowings into the door. So for this quarter, I do know they did not borrow money, they did pay back some borrowings, and they did some capital expenditure and that sort of thing. So when you add up every single cash flow from operating, investing, and financial, they did lose $300,000 of cash for the quarter. Now, I mentioned before, the trend of cash receipts is the most important thing, what I look for. I want a positive trend up, and we definitely see that with De.mem. Go back all the way to April 2017 to January 2021, the most recent quarter, we can see cash flows have been going, or cash receipts have been going up. For a period there between July 2019 and October 2020, it was very slow growth. And we've seen a bit of an expansion in cash receipts through this quarter. I believe that's mainly because of some acquisitions they made. I'm a little bit wary when it comes to acquisitions because I like to see organic growth. That's the main thing I really want to see. I don't like to see companies just growing by acquisitions. It's not always a good long-term strategy. It could be good in the short term or medium term, but in the long term, it may not be that good. So I will give a De.mem a pass here because typically growth by acquisition is bad for bigger companies and De.mem is not really a big company. Compound quarter growth rate of 7.3% per quarter. That's pretty good. So you analyze that, that's probably over 30% per quarter. So it's looking quite good. A nice looking graph here. So another big tick for De.mem. And this is their 1 year daily chart. Very similar to chart than other companies on the small end. A lot of companies reach sort of a shift in trend, shift in sentiment around July, August, and De.mem especially did that. You can see share price went from about 15 cents to 20 cents and has been going up ever since then over the past 5 or 6 months and finished the last trading day on Friday the 29th of January at 32 cents. And you can see from the low price in the financial panic, we'll say the COVID-19 financial panic, share price then got to 10 cents. So it's tripled in price since then. So a very nice looking chart for De.mem here. So the final company I'm going to look at is Digital Wine Ventures. Ticker code is DW8. Now, what does this company do? Now, I didn't know much about this company before I did some research on them in preparation for this video. So I got this company completely wrong. I thought they were just an online seller of wine, which didn't get me excited. And this just shows you maybe you shouldn't make assumptions about what a company does before you do any research. When I went to research what they do, I found this little statement in one of their presentations or somewhere, and it says they aim to identify and invest in early stage technology-driven ventures that have the potential to disrupt and digitally transform segments within the global beverage market, which sounds nothing like what I thought they did, and that actually is what they do. They do find those sort of businesses, technology-driven businesses that aim to disrupt the global beverage market. And when they talk about the global beverage market, they seem to be right now focused in wine. So they have made the one of their subsidiaries, I'm not sure what you can call it, but it's called Wine Depot, which is a cloud-based SaaS wine distribution company, which is nothing like what I thought they did. And that's the main driver of the growth in the company right now. They have made a recent acquisition called Wine Delivery Australia, so it'll be interesting to see how that goes. So this is another example of why you have to do research on a company, not make assumptions. If you want further information, do some further research. They did an AGM presentation on the 25th of November, and they've got a lot of information in the quarterly report, so definitely have a look at that. So this is the operating cash flow, or the Appendix 4C. So receipts from customers, only 646, but of course I want to know the trend, and we'll get that in the next slide. And they are operating cash flow negative to the tune of $1.4 million. So they haven't quite got to the point where they are generating cash in operations. So they began their quarter with $7.3 million of cash on hand and finished with $6.9 million. So they haven't, we're not bleeding cash by a lot, and the fact they have a fair bit of cash there on hand is quite good for operations over the next, at least the next few years. Now they did see some cash because of the exercise of options, $1.35 million through options exercising, and they did make that business acquisition, and that was only $506,000. So nothing too bad here. Now, ideally, I'd like to see a company being operating cash flow positive, but they are heading in the right trend, as you can see from the next slide. So this is the receipts history. Now, probably the main reason I really wasn't interested in this company, if you go back from July 2017 to even April 2020, there was nothing happening with this company, but you can see the massive growth in receipts over the last 4 quarters. It's gone from less than 100,000 all the way to over 600,000. In fact, when I did a compound growth rates for the quarterly. We had 34% compound growth rates since July 2017. And over the past year, quarterly growth rates have been over 100% per year. That's something I like to see, the sort of growth rates I like to see. And we'll see what happens in the next few quarters. But this is a potentially very exciting company at hand we have here. And the market has seen that excitement going back all the way to June. The share price has gone from less than 1 cent and all the way to above 6 cents at its peak in October. Share price has started to level off over the past few months and around about between 4 and 5 cents. So market has really got excited about this company, especially between June and October. We saw significant price appreciation. In fact, if you held it between that time, you would have made 6 times your money at least, particularly if you sold it at their peak of over 6 cents. So that's all I've got on these 3 companies, mydeal.com.au, De.mem, and Digital Wine Ventures. If you have any questions about these 3 companies, leave it in the comment section. In time, I'll eventually get to those comments, but at this point in time, it's taken me a while. If you have any more information on these 3 companies, leave a comment, because I like to hear further information about companies I do videos on. Otherwise, I am not a financial advisor, so if you need any information about your own financial circumstances, if you need any help, make sure you seek out someone who is qualified and can help you in finding your financial freedom or something. Anyway, that's all for today's video. Have a good day. Bye.